Lucid frontman Peter Rawlinson has spent a significant amount of time working in the electric vehicle industry, and he has a thorough understanding of what it takes to build a quick, luxurious, and effective electric vehicle. Despite the fact that the electric car industry continues to flourish rather nicely in the great scheme of things, with both wholly electric companies and traditional automakers both contributing to the sustainable energy transition, stock prices in the sector have not fared as favorably. One of the factors that contributed to Lucid's weak performance was the absence of any active analysis from the Wall Street Journal, and it is about to change, as both CFRA and Citi were bullish on LCID stock. This is what we'll be talking about in today's video. Stay tuned. Welcome back to New Vehicle Media, your go-to channel for EV stock. Quick reminder that subscribing's free and liking the video helps YouTube suggest similar content. Comments are loved and featured in our future videos. Lucid Group has finally received its first stock coverage from CFRA analyst Garrett Nelson and Citi analyst Italy Michele after a long period of trading on the NASDAQ. Before today, Lucid Group had not had a Wall Street analyst set projections for its shares since the company's merger with CCIV. CFRA is one of the largest independent investment research organizations in the world. It's an abbreviation for the Center for Financial Research and Analysis, which was established in 1994. Investment advisors and financial institutions can use it to gain a comprehensive understanding of global exchange-traded funds, as well as vital tools for analyzing the trends and themes that shape the funds. With regard to exchange-traded funds, investors and financial advisors are rushing headlong into strategies that make sense. Much of the transparency of index-based ETFs shows that the fund age is no longer important. CFRA rating for LCID. Lucid's route to automotive success, according to CFRA analysts, is not likely to be paved with rainbows and blossoming flowers. The company is entering the market at a time when any automobile company, let alone a completely new one attempting to get into the rapidly rising electric sector, would find it difficult to succeed. When it comes to the electric vehicle sector alone, Lucid will be a natural companion for Tesla, which has dominated the market since debuting the Model S in 2012. Although LCID has significant competitive advantages, Nelson cautions that investors should be prepared to hit some speed bumps because its closest competitor Tesla has developed a solid competitive moat. CFRA gave Lucid Group a buy rating and a price objective of $25 for the company's next 12 months. Lucid will release its first vehicle later this year, the Air Dream Edition sedan, which will be the company's first automobile. With a luxurious interior and clean design, the vehicle has an extremely expensive purchase price. Lucid, on the other hand, has brought forward characteristics that make it virtually worth every penny spent. When Motor Trend tested out the Air Dream Edition sedan recently, they discovered a dynamic and adaptive powertrain with high range ratings as well as amazing and terrifying white-knuckle performance. According to Nelson in a note to investors, quote, LCID appears to check all the boxes of an industry newcomer with staying power, end quote. Citing the company's upcoming luxury electric vehicles, its strong balance sheet and management team, at its brand new factory in Arizona. With the recent expiration of its PIPE investor lockup period and a near-term catalyst from initial deliveries of the Air, which are already receiving fantastic reviews, CFRA feels the stock's risk-to-reward ratio is tilted to the upside. Citi coverage of LCID. The CFRA was not the only organization that provided Lucid analysis. Also covering Lucid shares was Citi, a multinational investment bank and financial services firm based in New York. They too had a story similar to that of CFRA. Lucid Group shares have just been initiated into coverage by Citi analyst Italy Michele, who has given the stock a buy rating and a $28 stock price target, implying an upside potential of more than 47% from present levels. Although Michele did not elaborate on the reasoning behind this support, he did acknowledge that Lucid Group possesses the quote-unquote essential building elements for his bullish argument, which include strong EV technology credentials, years of development experience, brand momentum, and speed to market. In addition to dealing with chip shortage and supply chain limitations, Lucid will have to contend with many other challenges as well. Chip shortages, a problem that has affected practically every car maker in the world, have sabotaged several companies' expectations for a strong finish to 2021, forcing some production lines to halt as a result of increased automotive demand, while chip supplies are slowly depleting. The paid bookings for Lucid's Air Dream sedan have also been underwhelming thus far, with only 11,000 units having been reserved by the end of the first quarter of 2021. Considering Lucid is commencing its first ever manufacturing operations at its Casa Grande, Arizona facility, it's tough to judge whether this is fair or not. Given the unpredictable nature of automobile production, it is worth noting that CEO and CTO Peter Rawlinson refused to commit to a target of 20,000 production units in 2022, indicating that the business is being conservative in its expectations. Later this month, Lucid will hold a production preview event for members of the media and some reservation holders who have registered. During the week-long event, which will begin on September 27, 2021, members of the media, policymakers, and a limited number of customers will have the opportunity to see firsthand how Lucid will manufacture the Air models at its cutting-edge factory in Arizona. A deep dive into Lucid's advanced EV technology with the business's key engineers will be provided as the firm prepares for the first deliveries later this year. The conclusion: investors in LCID were perhaps the only ones who were dissatisfied with the fact that none of the Wall Street Journal's analysts had covered the stock as of yet. However, the coverage provided by both CFRA and Citi appears to have put an end to their dissatisfaction. The stock experienced a favorable trading week shortly after receiving analysts' coverage. A market maneuver of this caliber implies that analysts have faith in Lucid's management team, which is encouraging. The media frenzy surrounding the corporation has remained consistent, particularly following the findings of the analysis. Shareholders have been asked to keep an eye on the situation as the month unfolds. That advice remains valid as Lucid prepares for the day of redemption. Despite its weak performance in recent weeks, the LCID stock is unlikely to be affected by this trend in the long run. What are your thoughts on the matter? Do you believe that Lucid will be able to achieve the forecasted stock price of the CFRA and Citi analysts? Will this be the push that LCID has been looking for? Let us know in the comments section. Michael Fleischauer predicts that the stock will trade at a price of roughly $30 per share by the end of 2021. His estimates are close to what CFRA and Citi are suggesting. Nice job, Mike. That should wrap things up for today. Keep in mind that subscribing's still free and liking helps YouTube recognize your preferences. Thanks for taking the time to watch, and I look forward to seeing you in the next one.